Hey, today's video, we're comparing two different Magnificent 7 ETFs, YieldMax's YMAG YMAG and Roundhill's MAGY, often called MAGY. So they're both Magnificent 7 ETFs, income ETFs, and we're going to compare them and see what they look like under the hood. And just so you guys know, me personally, I don't even like the Magnificent 7. I'm just sharing this with you guys because some people talk about it and ask me about it, so I thought I would share with you guys, and I'll tell you guys more about that as we move on. So let's record the screen. 3, 2, 1, bam. Okay, so first of all, before we get into this, let's just start looking at all this stuff right here. YMAG has been out for quite a while. We're on the YieldMax Magnificent 7 fund. There's too much to read there. YMAG. We're on the YMAG page. Now you can see here, I've got the chart set for 1 month because I want to compare it to MAGY, M-A-G-Y, and MAGY's only been out for a few months, and this doesn't give me the option to choose like 4 months. So if I do year to date, these charts won't line up. So the easiest one to do is the 1 month chart. So if we look here at YMAG's 1 month chart, you can see it looks like it's doing pretty good. We had a dip and some going up, that kind of stuff. If we look at MAGY's chart, it's almost the same, right? We have the dip there at the beginning, and then we got an upswing, and it's slowly growing. The same with YMAG. So they're doing pretty much the same thing for the past month. Now, again, like I said, year to date, you can see this one came out in April. So you can see we have nothing but green here. But if we look at YMAG year to date, we have this big dip because this was the tariff thing, and then it came back and recovered. So it's not really a fair comparison. So that's why I do the month by month, because they've been out, you know, both for a month, but this one hasn't been out for a whole year compared to YMAG. So that's why I did it. So anyway, while we're here, let's go check out some more stuff about this right here. Let's check out the holdings in MAGY. So if you see what MAGY's holding, you can see they really only have two things here. MAGS, which is another Roundhill ETF. This is the one the Roundhill has that actually holds the Magnificent 7, but MAGY doesn't actually hold the Magnificent 7 in it. They don't own any stocks except for MAGS, which is their own stock. So, and then they have this government obligation fund. So they only have two things. One is their own product, and the second one is a government bond thing. Now, if we look at YieldMax's YMAG, let's see what they're holding. Now, they're actually holding stuff, but just like Roundhill, they're holding their own products. They're holding YieldMax, YieldMax, YieldMax. These are all YieldMax funds. These are the YieldMax tickers for the Magnificent 7. So you have Tesla, GUI, Apple, FBY, Facebook, whatever you want to call it, Phoebe, AMZY, MSFO, NVDY. So the 7 stocks that are in the Magnificent 7 aren't really in here. These are also the YieldMax version. So they're not the real Magnificent 7. And then you have the same government thing that's in the Roundhill one. So neither one of these actually hold the Magnificent 7, the real stocks in the Magnificent 7. They have their own versions of it. So you have that. Now let's check out the dividends really quick. On the dividend section, you can see here, this is YMAG, $7.76 per year, right? And that's a 49% yield. And you can see it pays out every single week. Okay, so if we look at YMAG, let's check out their dividends. 727 compared to 776. So they're almost the same dividend. This yield is 12.75%, and this one is 48.9%, because you can see the big price difference, 1585 compared to 5701. So even though the annual dividend is almost the same, the yield seems smaller because this is much more, you know, expensive in price compared to this one. So makes the yield different. If you look down here, you have the dividend history, so you can see 37 cents per week, pretty much. If you look down here, YMAG, you have 13, 14, 8, 11, 14, so on and so forth. So no big dividends, but no small ones. But if you just take, let's just take the last dividend just for fun, just 13.96, 37. So you basically need 3 shares to get more money than this 37 cents. You would need 3 shares of YMAG. But if you look at 3 shares of YMAG, you're looking at $45 compared to $57. So for less money, you can buy 3 shares of YMAG and get slightly more payout than you get with YMAGs for 57. So that's something to keep in mind. You just need more shares, but more shares are cheaper and you get more payment from the more shares. So something to think about. Now, what I really want to show you guys, we're going to get into a comparison of money invested. So if you look here, I brought this up for you guys already. You see this is starting on 4/23 because that's when Maggie launched, was in April. And so YMAG and Maggie, they're both showing the same time frame because YMAG came out much sooner. But if you didn't buy it then, it doesn't matter, right? We're talking about from now and the same time frame. So if you got here on the start date, here's all the information here. The starting price, $14. The ending price, which will be today, $15.85. So it grew by, $1.60. Maggie started at 52 and now we're at 57. So this grew by what? $5. So this one, the price, increase was quite a bit there, pretty good. Now, if we start, this is based on $10,000, by the way. So if you started $10,000 in YMAG, you'd have 700 shares, and today you'd have 864. This is assuming you reinvested 100% of the dividends. The same thing here on Maggie. We went from 190 to 216, and we received reinvested $7.28 per share, and here we reinvested $3.24 per share. But our return for YMAG would have been 37%. Total return, 23% on Maggie. So the return percentage is higher if you're actually reinvesting the dividends. And so the annualized gain, 90%. Wow, that's crazy. 57% is also pretty crazy. But you can see here the ending 13.7 and 12.3. So you can see YMAG, if you bought YMAG, 10,000 in it, or 10,000 in Maggie, and reinvested 100% of the dividends in both, YMAG would win by a pretty large margin. So if you look here, here's the chart. The black one is YMAG, 13,700, and the blue one is Maggie, 12,300. So you would have made what, $765, $1,400 more by investing in YMAG than Maggie. So let's go look at it. If we actually take the dividends and use the dividends instead of reinvesting, what does that look like? And again, we have the same things down here, the same price increases, but this time we're taking the money out of the fund. We're not putting the money back in. So the dividends collected, see up here we had this 324. We're not putting it back. We're putting it in our pocket instead of back into the ETF. So that changes our return to 33% instead of 37%. And over here we got 22 instead of 23. So slight variation. And then you have your annualized gain of 82% instead of 90. And then here we got 54 instead of 57. Now, if we go look at it on the chart, again, we have YMAG in black and Maggie in blue. You can see even if you're pulling the dividends out and putting it in your pocket every month, since April anyway, YMAG has outperformed Maggie. So that's the comparison between these two. Obviously, since April until now, YieldMax's YMAG is better than Roundhill's Maggie. But that being said, again, I don't even like the Magnificent Seven anyway. I would not buy either one of these ETFs, and for several reasons. I'll tell you my thoughts on it. I mean, I don't mean this right, but in this chair, over the past several years, the Magnificent Seven have been what they're called Magnificent Seven for a reason, right? They've been magnificent, but it's been several years now, and they've been outperforming everything on the market. And I don't know. I just don't know if these 7 stocks can keep performing at such a high level that they've been performing at over the past 2 decades, right? They've literally at least a decade, if not 2 decades. They've increased by so much. And I just think that there are other stocks that can outperform these. And, if you're looking for major growth, and stuff like that. I think I might be wrong, but I do believe some of the volatility in some of these Magnificent Seven stocks could eventually lower, which if it does lower, then the covered call income will be lower because the covered call income comes from volatility. And so that's one of the reasons. And then there's also a couple of like companies I don't really love in the Magnificent Seven, just for several different reasons. And it's just not somewhere I want to put my money. I had my money there before, actually, to be honest with you. I had money in YMAG for a while, and it did pretty well for me, actually. But I don't know, something about it. It was going through some massive dips, and at that point in time, and it wasn't doing very well. And I sold it, but it was not this. That's not the only reason why I don't like it. I just don't like the Magnificent Seven, and I believe there's better ways to make money and to make even more money, to be honest with you. And I just don't like them. But if you do like the Magnificent Seven, then based on this comparison that we've seen today, YMAG is better than Maggie in terms of your overall total return. It beat by like $1,400 if you're reinvesting. So pretty significant difference if you ask me. So if I had to choose one of these, based on what I've seen here today, I would choose YMAG over Roundhill MAGY. That's just my thought. Anyway, lots of free stuff below. Go check that shit out. And I'll see you guys on the next video.